Good morning, everybody, and happy Wednesday. We will get started here in just a minute. Good morning, good morning. Thank you all for being here. Excellent. Yep. We'll get started here in just a second. All right. Let's get started here. Always like to wait about 2 minutes past the top of the hour to give people just a little bit of time to log in. But I think we are ready to go and ready to get started here. All right, here we go. Again, good morning, everybody. It is Wednesday, and it is the 23rd of the month of October. We got 2 weeks left to go to the election. If you are new here, this is our Set the Market morning show. We do 10-15 minutes, go over what we consider to be some of the most important things to look at. And if you haven't done so yet, please make sure you subscribe to the channel. Give it a thumbs up like, because A, that allows you to get the updates in real time when we do new things. And also, it allows us to continue doing it. So top 3 things this morning. Number 1, got to keep looking at the yield curve. Really, really important. Number 2, we are going to look at what all of that means in terms of inflation, what that means, why it's bullish for gold and Bitcoin. And thirdly, I want to look at McDonald's, I want to look at Starbucks, and I'm going to look at Boeing real quick. So there are, I think, are trades setting up there. So let's start off with the first thing. This here is an important chart, and I would encourage everyone to either take a picture of this with your phone if you have one, or at least a mental picture, or a screenshot, or whatever you want to do. 2 things. So 2 lines, I should say. The black line is the S&P 500, which you can see clearly has been going higher, and the purple line is the inverted yield. So yield on the 10-year note has been going up, as you guys have probably noticed. I'll show you this chart from yesterday again in just a second. But you can see the big disconnect between the stock market and the bond market. And this is also actually what could potentially be the big problem after the election. And I say potentially because we don't know when it's coming, but the bond market could force the equity market to its knees for a while. That's possible. It's one of the potential outcomes after the election. I don't know if it's going to happen. I honestly think it's a coin toss at this point. And that's because the longer we rally into this election, the more we're pricing in what could happen after the election. So that's the other thing to keep in mind. Remember, since the Fed cut rates, the bond market, the 10-year note, has been going straight higher. I think I showed this chart here yesterday, if I'm not mistaken. That's this chart here. And then we get to, that's point number 1. Then we're going to get to point number 2. That's this chart here. I think we showed this one yesterday. So the minute the Fed cut 50 basis points, bond yields have gone straight higher. And we view this as being, the bond market basically rebelling and saying, you know what, if you guys are going to continue to run these deficits, we're going to demand higher yields. By the way, do you know what Mexico, India, and was it Brazil or a third country have in common this year? They all had elections, and the stock markets all sold off after the elections. I'm not going to say that's going to happen here because I really do think it's 50-50. I'm completely open to a rally, and we're going to do this with the TST Trender, which is our momentum indicator. And you guys are all welcome to join us in that session later on today. If you would like, you can just email Joel. It's Joel, Joelw at thesteadytrader.com. You can email him to join that session. But it's really binary as far as the outcome comes, and that's what the tricky thing is here right now when I talk to people. So that gets us into this, right? And we're going to get to Boeing, McDonald's, and Starbucks in just a minute, because I think there's trades setting up there as the third thing. This here is Jay Powell's sort of record of inflation, and basically the long-term record. But you can see the Fed started easing rates back in the 1970s, and ultimately after that we had another huge shock in inflation, which is the blue line going higher. And so we do think all roads lead to inflation, which is why, this gets to the point number 2 in a second, this is why we want to continue to own gold and Bitcoin. Gold has absolutely the potential to correct 10 to 15%. In fact, yesterday in our bucket 3 in Inner Circle, if you're Inner Circle member, we actually closed our gold GLD position. We remain in GDX. We will look to reopen GLD at some point, but we think it's just getting a bit overbought. But we want to own it from an inflation protection perspective. So that's where we are on that. Now, third point, or I guess continuation of the second point, we want to watch very closely after the election, not only the price of gold, which I'm going to add in here. Let me quickly see if I can do this. I think this is now, oh, here we go. Nope, that's not it. Where's this thing? Pain in the ass. Where is this thing? I got rid of the little tools here. I'm sorry, 1 second. I'll get to this. Just give me a minute. I need to find. No. Oh, I love when TradingView does this. Hides me the tools. I can't remember where I get them from. Anyway, I'm trying to show you a chart that gold has taken off. Oh, okay, let's just get rid of this then, and then we'll go over here. Here, all right, let's just look at this. So this is the gold versus gold minus chart that I showed you guys yesterday. Let's do the same thing, but do it with Bitcoin. I guess I can't do it. So the point is, gold's taken off. Bitcoin has not taken off yet. So we want to, oh, here, I can get rid of this one and change it. Here we go. I can show you this like this. All right. So again, you can see gold's broken out at the bottom. Bitcoin has not. So if we were to draw these two lines, sorry, this took a while. You would imagine that Bitcoin could go higher, or IBIT, the ETF, it's the same analogy, right? So just like gold miners as well, we could see that happening. Now, is it likely that this has to happen right after the election? No, it's possible that both gold and Bitcoin literally crash after the election. That is possible. I don't know whether it's going to happen, but I like it beyond that because inflation's not going anywhere. We want to be in this inflation trade. So we're looking to raise some cash into the election because I don't know whether it's going to be up or down, but that's why we want to use momentum, using our momentum indicator right after that. Okay, third point, and I mentioned this being the last point now. Let's go ahead and talk about three trades. That is Boeing, that is McDonald's, and that is Starbucks. All right, let me get this chart over here, and we are going to look at this right now here together. Now, Boeing this morning in pre-market is now down a few percent. Boeing has a situation where they are going to have a potentially announcement, maybe a settlement with their unions later on today at 5 o'clock Seattle time, p.m., 8 p.m. Eastern Standard Time. And so if that gets resolved in some shape or form, I think, and I talked about Boeing here last week, I believe, I think we could start to see a bottoming formation form in Boeing, in which case I would want to be putting on either options bull put spreads with Boeing on the long side, meaning I would expect Boeing to have to start having limited downside at that point. I don't know if it's going to scream higher, but I think we could get into a situation where the bottom starts getting priced in. And so, again, I need that to come out. The earnings are out now. That's good. But I think we need to hear from that union settlement later on today if we get it indeed. That's the plan. So that would be where I'd look to start putting on bull put spreads. Bull put spreads basically means we want to make a bet that the stock is not going to go down beyond a certain point. Meaning we can make money whether the stock goes up, sideways, or even down to a degree. Why do I want to start with that kind of trade? Because until a trend is established, we have a much higher probability of making money if you put on a bull put spread. If you're a credit spread authority member, you know that. That's Boeing. Let's talk about Starbucks. Starbucks is down a few percent this morning. Let me see. It's not bad. It's actually really holding up rather well, all things considered. It's down, like 4% this morning in pre-market. Now, remember with Starbucks, they have a new CEO, and that's why the stock basically got re-rated higher after they announced the new CEO. As far as I'm concerned, this stock remains in a consolidation phase, meaning I have absolutely no interest in betting on a breakout because it hasn't happened, but I also don't really want to bet on a breakdown. So I think this stock, until proven further, is going to be somewhat range bound. However, I will also say that I think what they're doing this quarter is they're kitchen sinking it. They are talking about the bad things that have happened in the past and how they're now getting to work to make things better. They're not going to start selling more $7 lattes or $9 lattes. I don't think that's going to work. But what they can do is they can reduce the menu. They can do some cost savings. They can improve the company that way. Given the inflation and everything we have, people are not going to spring for more $7, $9 lattes. It's just not going to happen. I just see no mathematical possibility of that. But they can cut costs. And so if that were to happen, then I think this stock is probably not going to go down a lot, but it may also not yet break out. Again, a similar situation to what I just described with Boeing, we could have here where the stock is just limited on the downside. So then I would want to start doing this trade with bull put spreads, meaning I would sell a put, buy a put, but for protection a bit lower, meaning I would make money if the stock were to go, let me find the right tool. If the stock were to go sideways, this tool, if the stock were to go sideways, if it were to go higher, and even if we were wrong and it would go down to a certain point, right? So that would be what I would like to start to do with a stock like this. Lastly, McDonald's. McDonald's this morning, I believe it's, if I could properly type this in, is down 7 or 8% still. Let's have a look how it's doing. I'm looking at another screen over here. Stock is down, like 7% or something like that. So basically looks like it's set to open around 290. So let's throw in some moving averages just for fun so we can kind of see what is 290. 290 for this stock is basically right here, and that's probably not all that random that the stock is finding support right there, because that is more or less on a weekly closing basis where you have a lot more support, broadly speaking. Okay, so the stock's looking to open up down there. I think McDonald's is probably going to be capped here for a while. The most recent example we have of an E. coli thing was Chipotle Mexican Grill. That took them a little while to figure out and get through. So I think this is going to be stock that's going to be limited on the upside. I don't think it's going to go and completely crash after today. It's going to take time, but I do think investors are going to take time to get back to the stock. And of course, patrons. I think, people who go to McDonald's, or some people, are going to be a little bit more hesitant. In addition to litigation and things they're now going to have to deal with. So again, similar situation. The stock this morning looks like it's going to drop. We'll have to see where it settles out today, of course, at the end of the day, after the trading day. But I think it's going to be limited on the upside. So instead of trying to make a bearish bet or hoping that it's going to go back up, I'm just going to say, listen, I think the stock is capped, meaning I would sell a bear call spread. So meaning as long as the stock doesn't go up there, I would make money. So that is our quick, furious 15 minutes here today. We've talked about inflation. We've talked about what that means for Bitcoin and gold. Again, after the election, maybe they rally more, maybe they first pause. We will find out. That's why we're going to use the TST trender, which is our momentum indicator, to find out where the momentum is. Make sure you email Joel at joelw@thesteadytrader.com if you want to join that session today at 2 o'clock Eastern. We talked about that. And the third thing we talked about is McDonald's. We talked about Boeing, and we talked about Starbucks. Hope it was helpful, folks. I'll see you guys again here tomorrow, Thursday. Have a great day. Again, please give us a thumbs up, like. Please subscribe to the channel. It helps you to get these updates, these alerts when we have these live sessions. We're going to do a lot more of these, particularly around the election now as well. And also, it of course allows us to keep this morning show up and running. Thank you so much, folks. And any comments, as always, they're welcome.